Now, a lot of Nigerians abroad are used to mortgages. Actually, a lot of you guys are already paying some form of mortgage the country where you are domiciled. Um, 10 years mortgage, 20 years mortgage, 15 years mortgage, 12 years mortgage. So, when a lot of you guys are looking for a house here, a lot of you guys are also expecting the same and looking at it. Okay, can I spread for 5 years? Can I spread for 10 years? And so on and so forth. So, in this episode of Me the Property Guy, we'll be looking at off plan versus mortgages. What is the difference? What are the similarities? Are they the same? How does it work? How does mortgage work? A lot of you guys already know how mortgages work. So, how does off-plan work? So that your expectation of what off-plan is and the reality of what off-plan is can be the same. Alright, in case you are watching or coming across our video for the first time, please meet the Property channel, and this will discuss everything real estate for first-time investors, avid investors, beginners, people are trying to learn the market, understand about how real estate works here, how the real estate market here is in Nigeria, in Lagos, in Abuja. This is your go-to channel. We share tips, guides, and advice on everything you really need to know here. And our advice to you after watching this particular video: go to our different playlists on mortgages, playlist on off-plan, playlist on short-let, playlist on land banking, playlist on land documents, playlist on land scams, and so on and so forth. We have different topics, several topics we have covered under each of these playlists. So let's go straight into the topic: mortgage versus off-plan houses in Nigeria. What's the difference? Now, if you have been watching our videos, this is your second, third, fourth, fifth, seventh video, and you are not subscribed yet to our videos, we really want you to subscribe. We always continuously share it on our screen. Subscribe, give us a like, subscribe, give us a like. We really want you to subscribe because we have a big target for the year. We really need your support in hitting that target. So kindly do subscribe to our videos. If you enjoy this topic, also kindly give us a thumb like. All right, so let's look at mortgage versus off-plan. Like I said before, a lot of Nigerians abroad in the UK, in Europe, in US, in Canada, they are already familiar with mortgages. They make a down payment, they make an equity contribution, and then a bank finance the house purchase, and there's a monthly repayment between them and the bank, and also an interest on the repayment too. So when a lot of you guys now come to our Nigeria market here, you are going to Nigeria Property Center, you are going to Instagram, you are expecting something similar when you want to buy a house here too. Now, the Nigeria and Africa economic system is cash and carry. Cash and carry. We don't run a credit facility system here. You want to buy a phone, you want to buy a car, you want to go buy a house, you go there with your money. You don't go there with papers or with credit card. All right, so it's quite different here, although we have mortgages here too, and we have banks that can even finance a house purchase even if you are abroad. So even if your source of income is not here, you are not based here, you are not living here, it's still also possible for you to buy a house here, and a bank is going to finance the mortgage. All right, but off-plan is entirely different from mortgages. Now, for mortgages, when you drop an equity contribution, you have access to the property, which means that you can stay in the property after the equity contribution, or you can rent the property out. Now, with off-plan, when you make a deposit on that particular property, you don't have access to that property yet. You can't live there yet, and you can't rent it out yet. You have to finish payment before you can take full possession of that property. Now, for mortgages, a bank is financing the house purchase. So out of 20 million, you drop 2 million. The bank will pay 18 million. Now, for off-plan, there is no bank that is financing. You drop 2 million deposit, you are still the one that will pay the 18 million. The difference is just that you are going into an agreement with the developer on how you want to pay that 18 million. Okay, I'll be paying 1 million for 18 months. It's self-finance. You are still the one paying for that property. No bank or finance company is financing the house purchase for you. Now, for mortgages, there is always an interest rate per annum on the repayment you are paying the bank. Now, for off-plan, there is also an interest if you are spreading beyond a particular duration, but most times the interest is not in percentage. The interest for mortgages are always in percentage. You see 3% per annum, you see 4.5% per annum, 6% per annum, 7% per annum, and in Nigeria you can see as high as 23%, 20% per annum here in Nigeria. So but for off plan, there is no per annum interest. It's just a one-off interest. The property is 20 million. If you are paying in 6 months, then let's say they add maybe 20% interest for if you are paying for 12 months. 20% interest is 4 million, so it's 24 million if you are paying for 12 months. Fixed interest, fixed extra charge. And then maybe you are paying for 24 months, they add maybe 8 million, which is like around 40% interest. So there's always a fixed extra amount if you are spending for a particular duration, but is not in percentage, unlike if you are buying mortgage. Now for mortgage, your credit score or your credit rating is very important, because the bank that want to finance the mortgage or that want to finance the house purchase, they want to be sure that you are earning well, you can repay, you have the financial capacity to repay, and once the your source of income is legit and shows that you can actually repay that particular amount. Now if you want to buy off plan, it doesn't concern the developer. If you like be into whatever you are into, it's not their business. Can you pay a deposit? Yes. Can you afford the balance? Yes. Yeah, take form, fill, pay. That's all. No, nothing like credit or nothing like pre-qualification, nothing like assessments, nothing like checking your credit score, your credit rating if you are buying off plan, because the money for that particular property is still coming from you. Now, like as I said before, it's still possible for you to buy a house down here with mortgage, even if you don't stay here or your source of income is not here. But the most importantly, Nigeria mortgage interest rates is not single digits. All those 3.5% that you are paying in US or 3% that you are paying in US doesn't apply here. Here is double digit interest. 18%, 23%, 22% is what you are going to be seeing here. And that's basically because of our inflation rates, and also mortgages cannot finance you and then they are making a loss. They have to make profit. So whatever they are setting as the interest rate have to be above the inflation rate. So that's just it basically. But it's very, very possible that a lot of Nigerians in diaspora that have bought houses here and it's just financed with mortgage. The difference is just that if you are abroad, most banks are going to require 40% equity. So you must have around 40%, 50% equity of that particular property, and then the bank is going to finance the 50% or the 60% balance while they set up a repayment between both of you. Now, if you want to buy with mortgage here in Nigeria, first find a bank. Meet all the requirements of the bank before you look for a property. See, if you go and look for a property, you are now looking for a bank to finance, you are just wasting your time, because before you are through with all the bank wahala, bank qualification, that property is gone, it's sold. So that's why you first look for a bank. A lot of there is Imperial Homes Mortgage, there is Brent Mortgage, Jubilee Mortgage, Home Base Mortgage, a lot of them, Standard Chartered Mortgage. A lot of these banks also have mortgage arms. GT has a mortgage, Access Bank has a mortgage, UBA has a mortgage, First Bank has a mortgage. So you can always reach out to any of your account officer in this bank and ask about their mortgages, and if they finance for Nigerians in diaspora, you can also ask for their requirement list. So you can start the mortgage requirement. Meeting the mortgage requirement can take you a year. So after you have met it, you can now just go into the market and look for a property and a finance. But if you get the property first, you are likely not going to get that property to buy, because by the time you are ready through the bank, that property is gone. So that's my advice. That's my advice for anyone that want to buy with money. First, sort all the bank requirements and everything they need before you now go into the property market for looking for a property. And another advantage is that some developers that are building off plan, but they already have option and partnership with different mortgage banks. For example, Landmark has partnership with Home Base Mortgage. So if you want to buy some of the Landmark projects, the one at Abijo GRA, the one at Abraham Adesanya, the one at Opikishere, so Home Base Mortgage can finance because they are already in partnership with them. The same thing with Victoria Crest Homes, also VCH. some of the VZH estate also, they have different partnerships with different mortgages, different mortgage banks, and they can always introduce you to one, and you can use that particular mortgage financing to buy that property too. This also is the entire process because it's like 2 to 1. The developer is providing you with the property and also providing you with the mortgage company to finance. Right, so these are the differences between mortgage and off plan. So if you are paying a mortgage over there, either you are in the US, you are in Canada, you are in UK, if you are coming down here to buy an off plan, is entirely different, and that's why I've given you the differences between these two. And if you have any question, if you have further, you need anything for me to further clarify based on the differences between the mortgages, the mortgage interest rate, the financing, and buying an off plan in Lagos, buying an off plan in Abuja, then you can drop a comment, ask your question, you can drop your comments, make your contributions, you can drop a comment, give us your feedback, and I will definitely attend to it. I'll always attend to my comments, and I'll share anything I can assist with you on that, either the banks, the requirements, the qualification, the kind of properties that you can buy with mortgage, or if you want to do mortgage, you want to do off plan, I can also advise you that, oh, don't do this, do this one, don't take this step, do this particular step. All right, so if I've been watching our videos once again, this is another reminder. If you have not subscribed to our videos, we really want you to subscribe. Kindly do subscribe. If you enjoy this content, kindly give us a thumb like. We have also been rolling that on our screen here, and my WhatsApp number is also always on the screen, so you can always reach out to me and you can see how we can assist you with a property you want to buy, an investment you want us to evaluate. I will always try my best to guide you on that. So I still remain your number one property on the planet, your property advisor, property consultant, Rabi Mustafa. Thanks once again for watching our videos, and see you next time.